Hey everyone, it's Josh from the Blockchain DXB podcast, and today is the 24th of August 2026. And so far, as the price of Bitcoin on the global cryptocurrency market is concerned, guys, things are definitely looking excellent. Bitcoin in particular is definitely pumped up a lot. Along with that, Ethereum is pumped up, and Hyperliquid looks like it is completely gone off the chart. So it looks like we have quite a lot of interesting things to cover in today's episode. And the reason why that thing is happening, guys, is because President Donald Trump, he did actually have a meeting with technology leaders, and because of that, I do anticipate there's some positive momentum in the world of Bitcoin and cryptocurrencies. Now, what I'd really urge our listeners to do is go to the official White House YouTube channel and listen to the entire event where President Donald Trump did actually involve people from Coinbase, Ripple, Kraken, as well as other technology leaders, and they were discussing what they have planned in store for us. And because of that, guys, looks like the price of Bitcoin and cryptocurrencies has pumped up. Now, this event, Satoshi, according to me, is great, and it does actually state that the Trump administration, they do have positive approach regarding Bitcoin and cryptocurrencies, isn't it? And now if you look at the Security and Exchange Commission, along with the CFTC chair, they're definitely pro Bitcoin and cryptocurrencies, right?
That market surge, George, is a direct reflection of the political momentum behind digital assets right now. You mentioned the White House meeting. Bringing Coinbase, Ripple, and Kraken into policy discussions represents a seminal moment, solidifying crypto's place in national economic strategy. This isn't just speculation, it's priced in regulatory certainty. The pro-crypto alignment of key regulators like the CFTC chair effectively dismantles the adversarial stance we saw for years, unlocking institutional capital that was sitting on the sidelines. Plus, Hyperliquid surge underpins the massive growth in decentralized infrastructure.
You know what, Satoshi, I really like that you said that this isn't just speculation, it is price and regulatory certainty. Really interesting choice of words that. Now, one of the reasons why I wanted to discuss this is because, Satoshi, from the 27th to the 29th of this month, there's going to be Jackson Hole Symposium, and the Federal Reserve Board chair, that is Kevin Walsh, he'll be making some really interesting statements on the 28th of August, which I believe is absolutely pivotal, because it does set the trajectory as to what decision will be done at the FOMC announcement, isn't it? So I'm right in saying, Satoshi, our listeners should definitely keep an eye on what the announcement is on the 28th of August.
The Jackson Hole Symposium is indeed the macro focus, George. Kevin Warsh's August 28th statement holds tremendous weight because it provides the clearest signal yet regarding the Fed's path on inflation and interest rates. A hawkish stance could act as a temporary break on the current bullish momentum, reinforcing the dollar. Conversely, any dovish rhetoric suggests impending liquidity, which traditionally flows straight into risk-on assets like Bitcoin and Ethereum. Our listeners should treat this as a definitive volatility trigger.
Now, what we'll do, Satoshi, in today's episode, we'll definitely go ahead and dig deeper into this. Now, the third macro-level news that we're going to be discussing later on today is connected to a legend called Ray Dalio, and what I'd really urge our listeners to do is follow him via LinkedIn, because via LinkedIn he's put out a really interesting post, and in that post, Satoshi, he's also hinted people to buy a bit of Bitcoin. Now look, according to me, Ray Dalio making such statements along with the event by President Donald Trump is definitely positive for the price of Bitcoin and cryptocurrencies, and that is one of the reasons why the price of Bitcoin and cryptocurrencies has bumped up. So in today's episode, we'll definitely go ahead and delve deeper into his post, and according to me, Satoshi, Ray Dalio is an iconic person not just in the finance space, even in the Bitcoin and cryptocurrency space, to be completely honest. Now, the final news for today we're going to be talking about is connected to Iran hackers and the US Department of Treasury, guys. They have put out some really interesting information regarding Iranian hackers because they were exploiting a lot of cryptocurrency as well as Bitcoin hodlers. So it looks like we have quite a lot of interesting things to cover, isn't it, in today's episode, Satoshi?
You're absolutely right to highlight that shift, George. Ray Dalio's move from longtime gold advocate to acknowledging Bitcoin as a valid macro hedge reinforces the institutional validation we were just discussing. When a pragmatist like him suggests portfolios need diversified asset exposure outside of traditional finance, it validates our entire discussion about regulatory certainty. Transitioning to that Treasury warning, this highlights the critical necessity of robust self-custody and security. State-sponsored attack vectors show crypto is now a geopolitical tool, used for both funding and as a target. That warning underscores the need for effective regulation that doesn't stifle innovation, George.
You're spot on, Satoshi. So it looks like we have quite a lot of interesting things to cover, isn't it, in today's episode. But like we do in every Blockchain DXB podcast, we'll also be looking at two news from Dubai, UAE, and the Middle East. Do you want to tell our listeners what are the two news you're going to be discussing later on in today's episode, Satoshi?
George, we're diving into two significant regional developments. First, Saudi Arabia's Humane is pushing AI hardware boundaries with its app-free, intent-based laptop. Second, Capital.com is securing its footprint here, announcing spot virtual asset services in the UAE following their CMA license approval. These mark massive strides for regional adoption and innovation.
It definitely does, isn't it, Satoshi? So it looks like we have quite a lot of interesting things to cover in today's episode. But before we go ahead and do that, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor, that is Amana. And they are the region's first and fastest growing regulated all-in-one trading and investing app. So look, guys, whether you're looking into investing in US stocks like Apple or Tesla, or mega giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what, guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now for the Blockchain DXB listeners, guys, if you want to go and build long-term wealth without thinking about it every day, explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, choose your preferred asset category, and let Amana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing, guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even crypto wallets. No friction and no hassles. And the best part is, guys, let's say if you need support, you would absolutely love Amana for this, because they offer 24/6 human customer service, as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the Blockchain DXB listener and community, guys, I do have something really exclusive for you. What you can do is register with Amana using the code Blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part, guys. Once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look, guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look, guys, if you're looking for a transparent, powerful and easy to use app, that's Amana for you. So what are you waiting for, guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code Blockchain DXB. And Amana, guys, is all markets one app. Next, guys, I'm happy to announce that Blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH Women taking place simultaneously. And trust me, guys, this is an event that you don't want to miss, isn't it? Because for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning, guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right, guys. Palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas, and quite a lot more. And the Guitar Hotel at Hard Rock, guys, is one of the most iconic venues in the country. So look, guys, if you're in the Web3 space, cryptocurrency, Bitcoin, or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners, guys, we have something really interesting for you, because you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue, guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen, guys, the code is DXB25, and by using this code you will be eligible for a 25% discount. And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below, guys, there's all contact details for Blockchain Futuristic Conference Florida 2025, as well as ETH Women. And look, guys, this is the future of blockchain technology brought into life, so don't just read about it. Be there and head to the website that is futuristconference.com and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media, guys, is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact, guys, the very mic that I'm recording is being sponsored by Advanced Media as well. And Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing, guys. They're taking corporate social responsibility very seriously. And they're focusing on 3 P's. That is people, planet and prosperity. Now listen, guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website, that is www.amt.tv. And here's the beautiful thing, guys. They also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so, guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE. So definitely check it out. And also, guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen, guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store, that App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gov Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen, guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally, guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet. And this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below.
Now, guys, since you're taking care of that, let's do one thing, Satoshi. Let's quickly run to the global cryptocurrency market. Now, here's the thing, guys. Because of the event by President Donald Trump, coupled with other events such as Ray Dalio writing this letter, the global cryptocurrency market is pumped up by $2.7 trillion just little over a week ago, guys. It was around the $2.2 trillion mark, so the impact of this is roughly around $500 billion. And what I'm really liking is the 24-hour trading volume. It is at $86.369 billion. Now, one of the reasons why I'm really liking this number is because we are recording this episode in the early hours of Dubai, and technically, guys, it is still Sunday in most of the Western countries. So keeping all of these things into consideration, these numbers are definitely great. As a matter of fact, Satoshi, even if you look at the volume of decentralized exchanges in comparison to the previous 6 months, after a very, very long time, the number has pumped up to $9.27 billion. And even if you look at the total value locked, that has pumped up Since the last 6 months, it was hovering around the $60 to $70 billion mark. In just a matter of weeks, Satoshi, that particular matrix has pumped up to $91.95 billion, really massive leap, isn't it? So it looks like there's some positive momentum going on in the world of Bitcoin and cryptocurrencies, right?
Yes, George. Since last week, the market has absolutely picked up pace. You're right to connect this rally directly to President Trump's meeting. Bringing those leaders from Coinbase and Ripple into the policy discussion provided that crucial regulatory certainty. Furthermore, George, Ray Dalio's LinkedIn post, shifting his stance to suggest Bitcoin as a valid diversified asset, has significantly fueled institutional optimism.
It definitely has, isn't it, Satoshi? And what I'm really liking, Satoshi, if you look at crypto-related ETF inflows and outflows, after a very, very long time, we have inflows exceeding $500 million mark, $501.5 million to be precise. And here's the crazy thing, Satoshi, if you look at the market sentiment, probably for the very first time in 2026, right now the market sentiment is at grade, and the number associated is 77. Really interesting matrix, to be completely honest. And what I'm really liking, guys, is there is a bit of optimism going on in the world of Bitcoin and cryptocurrencies. Now, why don't you do one thing, Satoshi? Why don't you tell our listeners what is going on in the world of decentralized exchanges? So do you want to read out the matrix of the top 5 platforms for our listeners, please?
It's definitely clear from that sentiment number that the optimism is translating to real activity, George. Looking at the data for top decentralized platforms, Uniswap leads with $2.05 billion in 24-hour volume. This is followed by PancakeSwap at $1.28 billion, BisonFi at $584.36 million, Pump at $570.01 million, and lastly, Aerodrome with $517.64 million. These metrics show substantial trading volume across the board.
Now, these numbers are definitely great, Satoshi, in 2026, but it is also important to note, guys, these numbers are nowhere what it was in 2025, probably even 50% of what it was in 2025, to be completely honest. And here's the thing, guys, if you look at the volume of stable coins, it has definitely picked up pace, but according to me, it should be almost double of what it is. Because Tether USDT's volume is $94.74 billion. Circle USDC's volume has definitely picked up a lot of pace. It is at $73.57 billion. FDUSD cars is at number 3rd, and its volume after a very, very long time has crossed the $200 million mark, $265.88 million. Now, what I want you to do next, Satoshi, is I want you to tell our listeners the market cap of Bitcoin, what is going on since the last 24 hours, as well as the dominance of Bitcoin, and do the same thing for Ethereum. And now, Satoshi, probably for the very first time in 2026, Ripple is at number 3rd, and it has significantly overtaken the market cap of Binance. So why don't you read out the matrix for our listeners, please?
Absolutely, George. These 2026 figures indicate a solid market resurgence, even if they aren't contextually near where they were back in 2025, trailing those peaks in some cases by 50%. But the rise in stablecoin activity points to stronger liquidity. Tether's volume hit $94.74 billion, USDC reached $73.57 billion, and FDUSD cleared $265.88 million, adding transactional velocity. For the primary assets, Bitcoin sits at a $1.55 trillion market cap, generating over $30 billion in 24-hour volume, maintaining 57.50% dominance. Ethereum holds a $295.39 billion market cap, with volume at $17.46 billion and 11.10% dominance. Finally, Ripple has significantly shifted the market landscape. XRP now stands above Binance Coin in total valuation at $94.42 billion, with $6.48 billion traded recently.
Well, thank you so much for that, Satoshi. Really appreciate that. Now, look, Satoshi, in every Blockchain DXB podcast, we tend to look at one new matrix. Today, what I wanted to do is, Satoshi, I want you to compare 2 different types of coins. The first one is made in American coins, and the second, made in China coins. So why don't you do one thing, Satoshi? Why don't you compare these matrix for our listeners, please?
It's a fascinating comparison, George, highlighting distinct geographical dominance. The Made in USA coins category commands a significantly larger market cap, totaling $309 billion, even with that 5.7% dip over the last day. XRP leads with $94.42 billion, followed by the stablecoin USDC at $55.57 billion, and Figure HELOC at $21.69 billion. Turning to the Chinese side, that market cap is $138 billion, with a slight gain in the last 24 hours. Binance BNB is the dominant player there at $93.36 billion, followed by Tron at $32.64 billion. The difference in skull is quite pronounced.
So it looks like right now, Satoshi, USA coins is almost 3 times of that of China, isn't it?
Actually, George, while the USA-labeled coins have a clear valuation lead, the gap is closer to over 2 times, not quite 3. $309 billion versus $138 billion. That significant disparity really underscores the impact of that anticipated regulatory clarity and institutional capital flow into the U.S. market we mentioned earlier. Another angle worth considering, though, is how rapidly the ecosystem surrounding those Chinese projects could scale, especially with Tron showing substantial stablecoin transaction volume.
So why don't you do one thing, Satoshi, in order for United States of America to have a significant lead? What are the key areas you think they should be focusing on, let's say 3 to 5 years down the line?
To maintain its competitive lead, George, the primary focus for the United States over the next 3 to 5 years must be establishing comprehensive and definitive regulatory frameworks. Ambiguity stifles institutional adoption, so passing clear stablecoin legislation and finally defining which digital assets are commodities versus securities is paramount. Secondarily, supporting foundational technological innovation, primarily in domestic infrastructure, Layer 2 scaling solutions, and zero-knowledge proofs will secure technological supremacy. Lastly, facilitating secure financial integration, expanding beyond simple ETFs into real-world asset tokenization, must be pursued while upholding stringent security standards. This will solidify the U.S. as the global hub for digital finance.
It's so strange, Satoshi, you mentioned definitive regulatory framework, because the whole idea of Bitcoin is separation of money and the state, isn't it? So now looks like we're circling back, and now we are focusing on regulatory framework, and I hate saying this, right now any nation that does have really strong regulatory framework, that does actually support innovation, will actually have a competitive edge, right?
You've hit on the key paradox, George. While Bitcoin was founded on the separation of money and state, established regulatory clarity is now essential for the real-world scale we're discussing. To maintain that lead in 3 to 5 years, the focus must be on crafting permanent, clear guidelines that welcome institutional investment and foster domestic development. This means proactively embracing tokenization and providing regulatory sandboxes for innovation to flourish. Ensuring talent retention by keeping the U.S. attractive for developers and entrepreneurs also gives that competitive advantage.
Well, really interesting perspective, Satoshi. Really appreciate that. Now let's do one thing, Satoshi. Why don't you tell our listeners what is going on regarding the king of all kings, that is Bitcoin? So do you want to tell our listeners the price of Bitcoin, what is going on since the last 24 hours and 7 days, and do the same thing for Ethereum as well as Ripple for our listeners, please?
George, let's talk numbers. Bitcoin, the king of them all, is sitting at $77,291, holding steady with a slight 0.12 bump over the last day. But look at that weekly leap, up over 22%. Ethereum similarly shows strength, trading at $2,447, gaining almost 1% on the day, with an impressive weekly surge of nearly 30%. And George, Ripple's XRP is on fire, at $1.50, climbing 1.32% on the day, bringing its phenomenal 7-day gain to over 50%. That broad-based growth across major caps signals significant market momentum remains intact.
And only because of that, Satoshi, Ripple has overtaken the market cap of Binance BNB Coin. But now it's going to be really interesting to see what happens over the next few days. And right now, Satoshi, if you look at the Fear and Greed Index, the number associated is 77. And probably for the very first time in 2026, the market sentiment is at greed. But here's what I want you to find out, Satoshi. Can you check real time what is going on regarding the conflict between Iran and US? Because look, Satoshi, what a lot of mainstream media is actually saying, that the president of Iran, he does want to go ahead and have peace. But I do not see any official news regarding that. So why don't you tell our listeners, what is the latest update regarding the conflict going on between Iran and US? And hopefully there's some final settlement regarding it. And also, Satoshi, can you also check how many ships did actually pass through Straits of Hormuz? Now, the reason why I wanted to find out the number of ships flowing the Straits of Hormuz is because the more ships means all prices will actually fall down, which would mean inflation will go down. And that would mean that the next FOMC announcement, or probably at the Jackson Hole event, Federal Reserve Board Chair Kevin Bosch will be making a careful decision, isn't it?
George, regarding the Iran-US situation, official channels remain cautious despite those media reports hinting at peace gestures. Tensions persist as diplomatic undercurrents continue. That greed sentiment at 77 reflects a market discounting potential conflict risks impacting asset prices for now. On shipping volume, the Strait of Hormuz continues to see substantial daily transit, averaging roughly 20 to 30 major oil tankers, indicating stable energy flows. A sustained increase in this flow, or conversely, minimal disruption, would reduce supply risks and potentially ease inflation, directly influencing Kevin Warsh and the FOMC's upcoming rate considerations.
And I cannot stress this enough, guys. Make sure you go ahead and look at only information from official sources, because mainstream media right now, they're definitely suffering from TDS or Trump derangement syndrome, and because of midterm elections coming up, they want to pull down the economy, isn't it? Now, what I wanted to do next, Satoshi, is I want to go ahead and discuss a really important event that did actually take place in White House. And at the event, guys, President Donald Trump clearly stated that the United States of America is becoming the global leader in cryptocurrencies, finance, artificial intelligence as well as new technologies. And what is really important to note, guys, is he clearly said that this is possible only because of support from leaders including Coinbase's Brian Armstrong, Ripple's Brad Garlinghouse, Kraken's Arjun Sethi, Robinhood's Walt Tenev, as well as Nasdaq's Adina Friedman. And at that event, Satoshi, there was also Intercontinental Exchange's Jeff Sprecher, and President Donald Trump did invite each and every one to go out and speak for a few seconds. And here's the thing, guys, he also praised CFTC chairman, that is Mike Selick, as well as Paul Atkins, who's the chairman of the US Security and Exchange Commission. And here's the thing, guys, he also urged Congress to go out and pass the Clarity Act. And what he said, if that thing happens, it will actually provide clearer rules for cryptocurrencies, and it would help innovation in the United States of America. And at the event, guys, President Donald Trump also highlighted the Genius Act, the Strategic Bitcoin Reserve, stablecoins, tokenization, as well as efforts to bring cryptocurrencies and financial activity into the American market. And here's the thing, guys, he also discussed AI infrastructure, and he talked about the importance of lowering interest rates. He talked about the investments flowing into the United States of America. He talked about energy and trades, and he argued, Satoshi, that the United States of America is growing strong. And he also said that new technologies are creating jobs and also attracting trillions of dollars of investment. This event, Satoshi, according to me, was great. And apart from the process of Bitcoin and cryptocurrencies, it does get a lot of motivation among the people. And I'm talking about builders in the space that the president of probably the most important country in the world is now a massive advocate of Bitcoin and cryptocurrencies, isn't it, Satoshi?
George, your observation about information sources points to a critical challenge for market participants right now, given the heightened political climate and economic uncertainty mainstream media is projecting. Focusing on the White House event itself, President Trump's clear declaration for the United States to become the global leader in digital assets, finance, and AI represents a historic shift in national policy. Amassing leaders from Coinbase, Ripple, and other key players means real high-level collaboration on execution. We're talking concrete proposals now on the table. The Clarity Act giving clear rules, fostering domestic development, the Genius Act, plus strategic Bitcoin reserves and tokenization frameworks to integrate traditional finance. Combining that policy push with his focus on low interest rates and energy production establishes a potent pro-growth strategy. The market sentiment shows the impact. It's giving builders confidence to invest and build long-term, knowing the regulatory environment is becoming a tailwind.
Now let me put you on the spot, Satoshi. Let's say if you were a personal advisor to President Donald Trump, what advice you'd like to give him in order that the United States of America does have a competitive edge, let's say in comparison to China, or maybe even Europe for that matter. And let's do one thing, Satoshi, let's talk about it from a Bitcoin, cryptocurrencies, AI, as well as upcoming technologies on how United States of America should have a competitive edge, okay?
That is, you put me on the spot, George, but this is what advice I'd like to give to President Donald Trump. First, for Bitcoin, establish a strategic Federal Reserve, actively encourage sovereign mining using American energy resources, and guarantee the right to self-custody. Additionally, enact clear tax rules for transactional use, support development of Layer 2 technologies like Lightning, and integrate Bitcoin fully within existing financial services. Moving to cryptocurrencies, pass the Clarity Act to separate securities from commodities, provide regulatory sandboxes for DeFi experimentation, and integrate stablecoins into the banking system. We must also create a streamlined licensing process, foster asset tokenization, and invest in blockchain forensics. For AI and new technologies, the U.S. should fund national AI infrastructure, streamline high-skilled tech immigration, and accelerate government adoption of emerging tech. Furthermore, provide targeted tax credits for innovation, allow flexible testing for advanced models, and prioritize STEM education. This approach secures leadership in this critical technology cycle.
Well, definitely solid advice, Satoshi, and I do hope Democrats do actually go out and listen to your advice as well. Now, the only thing I wanted to say, Satoshi, because of the price increase in Bitcoin, strategy looks like it has benefited the most because they were down by $13 billion in losses, and because of price of Bitcoin pumping up, right now they're in profit by $1.4 billion. But here's the thing, guys. Ethereum looks like it has jumped up the most. It has pumped up by well over 20%, and Hyperliquid has also pumped up the most. And at the session, Satoshi, President Donald Trump did actually mention Hyperliquid, and that was connected to perpetual market. And regarding the jump in the price of Bitcoin, Satoshi, looks like this was the 8th biggest increase since 2018. So am I right in saying, Satoshi, if this momentum continues, things will be great not just for Bitcoin and cryptocurrencies, even for the US economy as well, isn't it?
You're completely right, George. That turnaround is dramatic. Seeing entities that were once substantially underwater now in profit because of Bitcoin's pump reinforces your point about long-term strategy. Ethereum's surge over 20% and Hyperliquid's performance, even getting that mentioned by the president due to perpetual markets, shows broad-based growth. If this momentum continues, it advances the argument that blockchain adoption and rational regulation will not only drive crypto, but directly benefit the entire US economy.
Now talking about US economy, Satoshi, on the 28th of this month, the new Federal Reserve Board chair, that is Kevin Walsh, he will be making some speeches in it. Do you want to tell our listeners the significance of the speech? And based on your understanding, Satoshi, what do you think he's going to be talking at that event?
George, Kevin Walsh's August 28th speech holds immense significance because it provides the definitive guidance on the Fed's immediate policy direction. The market is hanging on his every word to gauge the next rate decision, making this paramount for both traditional and digital finance. Based on current economic data, George, he's likely to assess the persistence of inflation against the strength of the labor market. If the numbers point to enduring price pressures, he may reinforce hawkishness, forecasting higher rates longer. But if there's evidence of economic cooling, he could signal dovish support with future rate cuts. His perspective will set the tone for capital allocation across the entire financial spectrum.
And here's the thing, guys, because of midterm elections coming up, I do think that this event will be absolutely iconic. And during the 3-day symposium, which I believe runs from the 27th of August to 29th of August 2026, a lot of discussions will be taking place. And as you talked about, Satoshi, let's say if the sentiment is dovish, the prices of Bitcoin and cryptocurrencies will be impacted in a positive way. And the same thing will happen vice versa, right?
George, your assessment of that dynamic is spot on, and this creates the entire focal point for the symposium. A dovish stance from Kevin Walsh fundamentally signals a future influx of liquidity into the system, which directly devalues the dollar and drives capital into higher risk, scarce assets like Bitcoin and Ethereum. Conversely, hawkish commentary strengthens the dollar and increases borrowing costs, directly dampening institutional appetite for risk-on assets, leading to the opposite effect. Looking at the broader market, this dynamic is why Jackson Hole will define the near-term risk curve for maximum market participants.
Now, when you talk about hawkish and dovish sentiment, Satoshi, what do you think are the key words listeners should be focusing on, or so-called media experts? Because they will be cherry-picking certain words that Kevin Walsh is actually saying at the event, isn't it? So do you want to broadly tell our listeners what are the key words we should be looking at that would identify the sentiment if, let's say, the FOMC approaches dovish or hawkish?
George, for hawk watching, listen for phrases like persistent inflation, labor market strength, or further policy tightening. These indicate a priority on battling inflation by raising rates. Conversely, for dovish language, focus on terms like slowing economic growth, balance of risks, or even mentions of a pause. This suggests a greater concern for the economy and potentially lowering rates. These are the key words in play for anyone trying to forecast the Fed's next step.
And here's the thing, guys, mainstream media, they'll definitely go and twist the word, so I cannot stress this enough. Make sure you go and look at information only from official sources, and historically, whenever they go live, they do actually go live via YouTube, and in the Blockchain DXB podcast the day after that, we'll definitely go and touch base and inform everything to our listeners. Now let's do one thing, Satoshi, let's go and talk about a legendary investor, and we're talking about Ray Dalio, and everyone by now would know that Ray Dalio is probably the most influential person in the finance space. And more than a decade ago, Satoshi, he probably put out the most important videos on YouTube, and that is called as How the Economy Works. And Ray Dalio, guys, he's also the founder of Bridgewater Associates hedge fund. And what happened, Satoshi, via LinkedIn, he did actually put out a really interesting article, and the topic of the article is how countries go broke, the dynamic behind what is happening now. And in that post, Satoshi, Ray Dalio says that the US is facing growing debt problems as government borrowing rises faster than the demand for its debt, and he's warning that the rising debt payments, higher bond yields, and possible money printing could create a serious debt crisis and weaken the US dollar. And Ray Dalio, guys, does actually believe that the US should actually reduce its deficit budget to roughly around 3% of GDP through spending cuts, higher tax revenues, and lowering the interest rates. And here's the interesting thing, Satoshi, he also recommends that investors reduce exposure to bonds and diversify the assets such as gold and Bitcoin. Now, the moment he told Bitcoin, a lot of the Bitcoin maximalists as well as cryptocurrency advocates, they were really happy regarding this news. So why don't you tell our listeners, Satoshi, what do you think of this particular letter, Satoshi? And then also tell our listeners the significance of Ray Dalio putting out such information.
George, Dalio's letter paints a sober picture that directly aligns with his big cycle template. He argues the current confluence of factors, Japanese selling bonds, rising yields, weak demand, and treasury manipulation are textbook signs of unsustainable imbalances. The U.S. government is spending 40% more than revenue, with debt 6 times revenue, meaning debt service will crowd out spending. Dalio's proposed solution requires balancing cuts, tax increases, and interest rate reductions. This impacts the dollar negatively. Monetizing this debt will cause its value to fall, driving inflation. Conversely, Bitcoin is directly positioned as an alternative storehold of wealth. Dalio himself recommends investors diversify into gold and Bitcoin to protect against this currency devaluation. This validation from a macro pioneer provides massive momentum for the long-term Bitcoin thesis.
So let's say, Satoshi, if you were an ultra high net worthy individual, what percentage of your portfolio would you now allocate to Bitcoin?
George, considering the macroeconomic landscape and referencing Dalio's research, the strategy moves beyond mere speculation to becoming direct portfolio insurance. While Dalio suggested 10 to 15% gold, positioning Bitcoin within that diversifier bucket depends on an individual's specific risk tolerance and their view on direct dollar weakness. For many high net worth individuals, the allocation is calculated as a protection against systemic failure versus a separate speculative portion meant to capture sheer upside.
That's perfectly fine, Satoshi, but let's say if your net worth was roughly around $600 million, how much of it do you think you would personally allocate it into Bitcoin? And here's the thing, guys, whatever we're saying is not financial advice. Make sure you go and do your own research.
Well, George, the approach changes fundamentally when dealing with that scale of wealth, whether it's 600 million or 200 billion. The primary objective shifts from generating massive returns to strategic capital preservation and systemic insurance. Based on the macroeconomic analysis we just reviewed, I would treat that allocation not as speculative, but as a direct hedge against fiat currency debasement and sovereign debt risk. Given the current environment, an allocation that mirrors the traditional role of gold, perhaps within the 5 to 10% range, strikes a balance between securing substantial protection and maintaining overall portfolio stability. This provides significant exposure to capture upside from further institutional adoption, while mitigating the impact of any single asset's volatility on the broader capital base.
So are you saying, Satoshi, you'd put 5 to 10% of your allocation into Bitcoin? That is ridiculously high, to be completely honest. I was thinking you'd probably say somewhere between 2 to 4% or probably even less than that.
Understood, George. Your caution is valid from a traditional perspective. However, that 5 to 10% suggestion views Bitcoin strictly as systemic insurance against the specific debt money printing spiral Dalio outlined. Given the U.S. government's trajectory of borrowing to pay interest on existing debt, that allocation isn't about chasing gains. It's about protecting capital against a potential sovereign debt crisis. Ultimately, the allocation size becomes a direct bet on the resilience of the existing fiat system versus digital alternatives. Another interesting dynamic is how that allocation choice compares to positions held in other commodities like gold.
Well, definitely interesting point, Satoshi. Really appreciate that. Now let's do one thing, Satoshi. Let's go ahead and discuss the final news for today. And this is connected to Iranian hackers. And here's the thing, guys. There's some really interesting information put out by the US Department of Treasury. And what the article actually states, the United States of America shot 17 Iranian hackers, and they are accused of stealing more than 31 terabytes of research and intellectual property from universities, campus, companies, as well as government agencies. And the campaign allegedly targeted 144 US universities and was carried out for the Iranian government and IRGC, with some stolen data later sold online. Now here's the thing, guys, the case also shows how cyber attacks can target valuable digital information and infrastructure, similar to a broader security risk faced by the cryptocurrency industry. And regarding this news, guys, the United States of America is offering up to $10 million for information leading to several accused hackers. This information is really powerful, isn't it, Satoshi? What do you make of this particular news?
George, the theft of 31 terabytes of intellectual property constitutes a massive breach of national economic security. This isn't just cybercrime, it's industrial espionage aimed at undermining our competitive edge. The parallel you drew to the crypto industry is spot on. Securing sensitive research data on university servers presents the same fundamental challenge as protecting billions in digital assets. Vulnerabilities persist regardless of the target. This $10 million reward underscores the rising threat level, reinforcing the absolute necessity for constant vigilance and robust private security measures, a principle crucial for any institution, particularly those in the digital finance space, to defend against constant state-sponsored and criminal threats.
And here's the thing, guys, they're also offering up to $10 million. Now, Satoshi, if you and me were to tie up, what advice you'd like to give me or anyone else who's trying to find out who the accused hackers are?
George, for anyone attempting to pinpoint these attackers, the primary objective should be leveraging official channels. One critical pathway is closely analyzing the unsealed indictments from the U.S. Department of Justice, as these documents frequently disclose specific identities and affiliated organizations. Another approach involves scrutinizing threat intelligence reports published by top cybersecurity firms. These firms systematically track nation-state actors and often attribute attacks based on unique digital footprints and methodologies. Furthermore, monitoring disclosures from the state and treasury departments regarding their reward programs provides real-time updates on wanted individuals. It's also imperative to consider the broader geopolitical context, understanding that these attacks often serve state objectives, which can narrow down the suspected entities.
That is definitely solid advice, Satoshi. Really appreciate that. So these was a macro level newscast on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from blockchain DXB. Now let's do one thing, Satoshi. Let's go and look at two news from Dubai, UAE, and the Middle East. The first one is all the way from the Kingdom of Saudi Arabia, and this is connected to a massive company called as Humane, and they're teasing a new AI laptop in Saudi Arabia, isn't it? So do you want to tell our listeners, Satoshi, more information regarding this particular news?
That's absolutely correct, George. Humane has teased a new AI laptop for Saudi Arabia, signaling powerful domestic tech ambition. The PIF-owned company developed it with Qualcomm, George, and securing that key partner shows serious financial backing and focus. The laptop can run AI models directly on device, moving beyond simple processing to true edge computing. Local AI could reduce cloud dependence and response times, George, making computing more immediate and reliable. The device combines CPU, GPU, and neural processing, a hardware strategy designed for optimal on-device intelligence. Humane wants to rethink traditional computer operating systems, George, suggesting established paradigms are obsolete. The system could focus on user intent rather than apps, making interactions intuitive rather than procedural. AI agents could complete tasks across multiple applications, George, providing a holistic user experience. Users may simply tell the computer what they want, replacing complex commands with natural language. On-device AI could provide greater data privacy and control, George, keeping information local and secure. Local processing could help when internet connectivity is limited, ensuring resilience and utility everywhere. The technology could benefit governments, banks, and businesses, George, enhancing efficiency and security. Humane has developed the computer with Qualcomm for 12 months, showing a steady development timeline. More details are expected at Leap Riyadh later this month, an event we should follow closely, George. Full specifications, pricing, and release dates remain unconfirmed, adding suspense to the final rollout. The reported device could include Qualcomm's Snapdragon X2 platform, potentially delivering massive performance. The laptop is part of Humane's broader Saudi AI ecosystem, George, connecting hardware to a national strategy. Humane is building AI models, data centers, software, and computing infrastructure, George, developing the full technological stack.
This is definitely a game changer, isn't it, Satoshi? And it's going to be really interesting to see how much it is priced at. But for our listeners, Satoshi, do you want to tell our listeners, how do you think users will benefit in terms of, let's say, cost, quality, as well as time? If you can give us some example, that'll be great as well. So let's say documenting something would take, let's say, 2 hours. With this new laptop, it might approximately, say, take 20 to 30 minutes. If you can give us some approximation, that'd be great.
Regarding time, George, that 2-hour documentation task you mentioned could actually shrink significantly. By leveraging those multi-application AI agents focusing solely on user intent, a comprehensive market report pulling data from financial, analytical, and text processing apps simultaneously could happen almost instantly, reducing work hours to minutes. From a cost perspective, users avoid heavy cloud compute fees or monthly AI service subscriptions, achieving substantial savings over the device lifecycle. Furthermore, the quality of work improves through real-time, low-latency iterations, allowing for immediate refinement of complex visual assets or faster coding breakthroughs, all while maintaining absolute data sovereignty. This shift fundamentally optimizes competitive positioning.
Now, this definitely sounds great on paper, Satoshi, but I'm pretty much sure there's going to be a couple of drawbacks as well, isn't it? So can you envision what could potentially be some drawbacks or some negative aspects regarding this particular new laptop?
Those are essential considerations, George. The cost of integrating high-performance CPU, GPU, and neural processing units locally could result in a significantly higher price point, potentially limiting its accessibility. We also have to consider that, while fast, on-device models might not match the sheer capability or complexity of the multi-trillion parameter models run in the cloud, offering a different performance ceiling. Furthermore, intensive local AI processing constantly strains physical hardware, which raises concerns about battery life and thermal management. Developing an entirely new operating system also risks significant software fragmentation. Existing applications might run poorly or not at all, creating substantial adoption friction for users dependent on present-day toolsets. Another angle worth considering is whether updating these localized models efficiently poses logistical challenges compared to seamless cloud-based improvements.
Now, at this point of time, Satoshi, we wouldn't know the naming of it, right?
That's absolutely right, George. The specific naming for this AI laptop has not been officially revealed yet. We're only seeing descriptions like new AI laptop or localized computing device.
If you were to name it, Satoshi, can you give me 5 names you'd like to put for this particular laptop?
Thinking about that naming, George, to emphasize its unique architecture, you could call it Axiom AI. Another powerful title highlighting the local neural processing would be Synapse Local. If the goal is to emphasize speed and intelligence at the hardware level, Intellect is Edge conveys that. To focus on the intent-driven OS, Intent Engine works, or 4-score to signify resilient local processing.
Anything that'll be in line with, let's say, Saudi Vision 2030, or something to do with Middle East ideologies, or probably Saudi Arabian history that is connected to technology?
George, aligning with Saudi Vision 2030 and local heritage adds a powerful layer. Considering that, you could call it Najd compute, referencing the central region and implying strength and centrality. To honor the Arab world's foundational contributions to mathematics, Al-Khwarizmi Core would link foundational logic directly to modern AI. To focus on the future-oriented goals of Vision 2030, Mustaqbal Mobile works, with Mustaqbal meaning future in Arabic. Emphasizing dynamic insight per the intent-driven OS, Basira Edge would convey that. Or Palmentel to link locally strong heritage with digital intelligence.
Excellent, Satoshi. Really appreciate that. Now let's do one thing, Satoshi. Let's go ahead and discuss the final news for today. And this is connected to Capital.com. And the news cause is that they are planning to offer regulated crypto services in United Arab Emirates, and its affiliate Capital Vault has secured a full CMA license. And here's the thing, guys, the license covers dealing and custody of virtual assets, and UAE clients now will be able to buy crypto assets outright, and customers will access these services through the Capital.com app, and Capital Vault would provide regulated custody for client assets, and it will handle execution and settlement services. And so far as Capital Vault is concerned, guys, they operate from the Abu Dhabi office, and it's important to note that the company operates as a separate regulated entity. But here's the important thing to remember, guys, is governance, custody and risk systems remain separated, and Capital Vault is among the first CMA licensed virtual asset firms, and this particular move, guys, expands Capital.com's digital asset services in the MENA region. And back in 2025, guys, Capital Vault Europe previously secured MiCA license authorization as well. And regarding the news, Capital.com says that UAE clients requested regulated crypto access. And here's the thing, guys, the CMA licensing process provides regulatory oversight and controls, and additional virtual asset products are expected to follow later. And here's the thing, guys, Capital Vault is now building a dedicated UAE virtual asset team, and the company expects to expand its UAE crypto services further. Really interesting development, isn't it, Satoshi? What do you make of this particular news by Capital.com?
This news, George, is a landmark development for institutional crypto adoption in the MENA region. By securing that full CMA license and operating as a separate regulated entity with distinct governance and custody separation, Capital.com is building material trust. This enables UAE clients to buy virtual assets outright and utilize Capital Vault's regulated custody, unlocking direct ownership and security for large investors. It's also key to highlight their expansion in the MENA region following their European MiCA license, demonstrating a consistent push for regulatory compliance services. This move reinforces the UAE's position as a global hub for digital finance.
This news definitely sounds great, Satoshi, and probably is, but right now, Satoshi, if you look at the Middle East, particularly United Arab Emirates, it is no longer a blue ocean, it is more of a red ocean. There are so many competitors, isn't it? So what advice you'd like to give to Capital.com so that in 2026 and going further, they can still probably have a competitive edge?
George, the market is indeed crowded now. Major competitive advantages will stem from deep integration with local fiat corridors. Capital.com should collaborate directly with domestic banks to streamline fund flows, making the on- and off-ramp process seamless. Another key focus must be product specialization. Leveraging that specialized custody license, they should lead on tokenizing regional real-world assets like real estate or private equity, offering products competitors cannot easily replicate. Furthermore, doubling down on user education tailored to regional regulatory changes directly builds long-term loyalty. This provides raw density of value beyond just trade execution.
Well, interesting advice, Satoshi. Really appreciate that. So these were the newscasts on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from Blockchain DXB. In case you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. So let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, alright?
That's absolutely correct, George. And it's an exciting time for the space. I'm ready to dive into any query the listeners have. We're now officially open for questions, covering Bitcoin, blockchain, cryptocurrencies, NFTs, DeFi, Metaverse, and beyond. This is the segment where we break down the complex and explore the future. George, so send those questions through.
Hey everyone, it's Josh from the Blockchain DXB podcast. You're listening to the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and Metaverse. And we have a question from Tony. He asks, what will matter more to Bitcoin, Jackson Hole event, ETF flows, or US crypto regulations? What is your take regarding it, Satoshi? I think it is definitely an interesting question.
George, that's a critical question from Tony. While the Jackson Hole sentiment dictates short-term liquidity and ETF flows represent structural institutional demand, U.S. crypto regulations undeniably carry the most long-term consequence. Federal Reserve policy creates volatility cycles, but regulatory frameworks establish the fundamental operating environment for innovation and mass adoption. This legal certainty, or lack thereof, ultimately defines the scale at which both persistent institutional flows and broader retail participation can permanently manifest.
I agree with you, Satoshi. I'd even break it down further, Tony. When you talk about ETF inflows and outflows, we tend to look at it on a 24 to 48 hours basis, isn't it? So am I right in saying, Satoshi, when you talk about ETF inflows and outflows, we definitely should be looking at it from a short-term point of view, but over time, it does give us a very strong assessment as to what the market sentiment is. And when you talk about Jackson Hole event, or probably even upcoming FOMC announcement, it is more of a short-term, probably 1 month to probably 3 months down the line, because look, after the midterm elections, I'm pretty much sure the FOMC announcement will not be having so much of an impact. That's not to say that the FOMC announcement will not be having an impact, but because midterm elections is coming up, and because mainstream media is biased, I'm pretty much sure they'll be twisting the news, because they want to go and put out fake news regarding Republicans, isn't it? But according to me, Satoshi, what you said is spot on regarding crypto regulations. But am I right in saying any statements or positive sentiment regarding crypto regulations will also be impacting Bitcoin either in a positive or negative way? And regarding clarity, Satoshi, I believe by the 15th of this month there's going to be Senate voting taking place as well as Senate. So look, Satoshi, we need to be looking at it probably from a very short-term point of view, medium-term point of view, and also long-term point of view, as you mentioned, isn't it?
George, the analysis of Tony's question regarding Jackson Hole, ETF flows, and regulations is fundamentally defined by the timeframes you highlighted. While those immediate ETF numbers signal institutional interest today, and any dovish or hawkish sentiment from Jackson Hole immediately impacts this month's liquidity and buying patterns, the core issue remains U.S. crypto regulations. Those regulatory structures hold the ultimate key for long-term integration and scale, George. They set the legal ground rules that will determine whether those institutional flows establish a permanent trend and how broader adoption can truly materialize over the next few years.
So for Tony as well as for our listeners, Satoshi, what advice or matrix you suggest to keep a track on, let's say, regarding Jackson Hole event, ETF inflows and outflows, and also regarding crypto regulations? You can definitely tell them to go and check out the Blockchain DXB podcast as well, right?
Tony and our listeners should definitely track the specific language and central bank speeches for Jackson Hole sentiment, focusing, like we discussed, on phrases like persistent inflation or slowing growth. For ETF flows, monitoring daily inflow and outflow data from official sources or reliable data providers is critical to gauge institutional demand. And on crypto regulations, watching for unsealed indictments from the DOJ, official statements from the Treasury, and progress on bills like the Clarity Act in Congress provides the necessary regulatory context. They should, of course, also stay tuned to the Blockchain DXB podcast for ongoing analysis.
Well, thank you so much for that, Satoshi, and I cannot agree more. Definitely a great question and valid suggestion to check out the Blockchain DXB podcast, Satoshi. And that's about all, guys, from the Ask Me Anything See Some Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Remember, Monday to Thursdays, we are Blockchain DXB podcast. We look at the process, we look at the latest technological development. Then, guys, you look at 2 news from Dubai, UAE, and the Middle East. We talk about different partnerships. Artificial intelligence is definitely a hot topic in the Middle East right now, and the United Arab Emirates along with Saudi Arabia are definitely leading the front. And what you're listening to right now, guys, is the Ask Me Anything series, where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, metaverse. So thanks so much for listening, guys, and have a nice one. Bye-bye. And thank you so very much, Satoshi. Have a nice one.
It was a productive session, George. Thanks for having me. I look forward to analyzing the next wave of developments with you. Goodbye.